Hey, happy holidays, everyone. Just wanted to quickly go over what I look for in valuing a pot company, um, and then just go over kind of what's transpired over the last 2 or 3 weeks. So let's get started. So anyway, yeah, what was it? 2 or 3 days ago, some bullshit short report came out from Grizzly Research, and I don't know who these guys are, but bunch of baseless allegations on True Leave, and that kind of shook the company. I don't know, it was down as much as I think 25% in one day. It's kind of bounced back. Um, anyway, it's complete garbage, and um, whoever these people are, I think a lot of people are trying to figure out who these fraudsters are. But if they made some short-term profits, I guess good for them. But they're going to go to court pretty quick. They're going to get sued by True Leave, I think, because those are all false allegations. A lot of it's already been publicly disclosed by them. And then, Kim Rivers bought some stock a few days ago just to, show that she has confidence in the company. And, that share lockup has been pushed back from January to May, I think, of 2020. So they're basically telling these fraudsters at Grizzly Research to F off. And anyway, the numbers are going to show in the next, 2 or 3 quarters. They're going to show huge growth. So I don't think there's anything wrong with that. I decided to, dip my feet in a little more in True Leaf. My average costs are in the low 12s, so I'm happy every time it sells off into those levels. I'm just going to pick up some more. So anyway, yeah, so I guess that was a little bit of a tangent, but so how I value pot companies or cannabis companies, since most of them are not really profitable, it's tough to value them kind of on a regular kind of metrics. You can't really go by PE ratios or look at positive EBITDA. So basically for 2020, how I'm valuing them is I kind of look at enterprise value, and then I'm also looking at kind of their sales forecasts. So, enterprise value is basically market cap of what the company is currently trading at, and then add back any debts that they owe, and then you'll get a total enterprise value, and then you can use that, and then you can forecast what you think sales will be for, say, next year. You can use a bunch of analyst reports. In my personal opinion, analyst reports are complete garbage, and they have been, and they've shown over the last 2 or 3 years in this sector that they have no effing clue of what's going on in the sector. And fair enough. No, I don't think anyone knows. It's a new industry. So you would have to do your own forecasts or just use an analyst forecast. But analyst forecasts are overly optimistic, so being more conservative will save you a lot of money down the road. So basically for next year is what I'm using is enterprise value divided by total sales. And then how I divide it up is I look at 3 tiers basically in the cannabis sector. So you have, your larger caps in the space, and the larger caps I would classify as any company that has over $1 billion valuation. So Canopy, Aurora, Tilray, Kronos, Afria, all those companies I would consider kind of the larger caps. So historically, those have kind of traded, the multiples have been contracting. So yeah, the EV to sales has been coming down, and currently that kind of group is trading at around a 4 times EV to sales. So yeah, Canopy would probably be the highest valued out of them all. And then, you know, I think Aurora basically has, you know, a 2 or 3 times EV to sales ratio currently. So that's kind of the average. And as sales growth kind of maybe starts picking up here with Cannabis 2.0, I'm not certain that's going to happen, but you might start seeing some margin expansion with those higher derivative products. So yeah, and then kind of your mid-tier companies are trading currently at around a 2 times EV to sales ratio, and those would be like companies like Hexo, Organigram, Village Farms. What else do we got here? You know, CanTrust and Supreme Cannabis, I guess, are kind of your mid-tier companies. So those are companies that have about, you know, 300 to $600-700 million market cap. So the ratio on those are around 2 EV to sales, and they are just worth a little less because they might have a little, you know, harder time accessing capital. They might get higher interest rates for some of their debt. So that's kind of why the company, or that's why they're valued at, you know, less than kind of the mega caps or the larger caps, which might have a, you know, 1.5 to 2 times valuation compared to the mid tiers. And then you got junior guys like Cannabis, Alethea, you know, some of those guys, those I would consider your junior plays. You know, Emerald, WMD, those kind of guys, they average at around, you know, a 1 time or maybe even a 0.5 time to 1 time EV to sales ratio. And that's currently right now. The sector is always changing. So with Cannabis 2.0, who knows? Maybe those margins start expanding and, you know, those ratios start going up. But the whole sector kind of trades as a group. And you'll always find the ones that have the stronger balance sheets and, you know, less funding risk. The ones that have, you know, better sales in terms of the products are higher quality, they're going to get a bit of a premium in terms of how they trade compared to the rest of the group. So that's kind of a quick rundown of how I would value them currently based on 2020. You know, and as more companies maybe show some profits down the road, you can then value them basically EV to EBITDA type of a metric in terms of valuations. And maybe in 2021, that's kind of what I would do to get a better sense of what those companies should be worth. But yeah, so that's kind of how I value it, and I hope you actually find that useful. So anyway, that's all for now, and have a good night and Merry Christmas to everyone. Okay, bye.